Hi, welcome to Christensen Wealth Management. I'm Michael Christensen, and thank you for taking time out of your day to watch this weekly stock market update for the week ending Friday, August 31st, 2018. It's hard to believe that August is coming to an end, but I'm looking forward to fall. It should be nice. Well, before I jump into the charts and commentary, I would like to begin with the quote of the week, and this week's quote is from Julius Charles Hare. He was an English theological writer, born in 1795 in Italy, and he once said, "Be what you are. This is the first step toward becoming better than you are." Those are some wise words from Julius Charles Hare. Well, the stock market began the week with quite a bullish rally. All the major indexes, the Dow, S&P, Nasdaq, all extremely green and rallying to the upside. The emerging markets and the Chinese indexes had a great day as well, and so did the European indexes. So things are definitely on a strength mode for the moment. But last week we broke a record, and I think it was last Thursday, which was the 21st of August, we became the longest stock market expansion since World War II, or ever, going back to World War II. So I've been telling people that yes, it is nice to enjoy the stock market rally while it is here, but do not forget that no stock market expansion has ever gone on this long before. Again, going back to World War II. So if you want to be aggressive, it's always best to be aggressive at the beginning of a 9.5-year record-breaking stock market rally, and not to be very aggressive at the end of that record-breaking rally. I'm not sure when the rally, or I should say when the rally and record will come to an end, but chances are it will probably come to an end someday. A lot of people use the phrase, "This time is different," but it rarely ever is. So always keep those thoughts in your mind that we are extremely overdue for a stock market downturn whenever it may arrive, and that no, this time is not different. So always keep a level head and just watch the markets and follow what they are doing. Well, let's go ahead and see how these markets are doing. You will notice that there is a tremendous amount of strength in these markets, and we'll begin with the Dow Jones Industrial Average. Here's the chart of the Dow Jones Industrial Average, and you can see this all-time high here from January 26th, 2018, followed by the big 10% crash in early February, then a rally and so on, and we went sideways we're still going somewhat sideways because we've never gotten back to that January 26th high. However, we have taken out the prior high here of February 26th, and we have been in a very nice uptrend since June 27th, right here, going this nice uptrend. A couple things we'll bring to your attention though. The 5-day moving average in red and the 20-day moving average in blue is the short-term indicators, and you can see that the 5-day moving average in red is nicely above the 20-day moving average, indicating short-term strength is confirmed by those two moving averages. If I turn on the 50-day moving average, you can see that the 20-day moving average and the 50-day moving average are here. The 20-day is in blue and the 50-day moving average in purple. And those are the intermediate term indicators, meaning weeks to months in duration, and we have a strength confirmation there as well when the 20-day moving average crossed above the 50-day moving average. That confirmed intermediate term strength. So right now, the Dow is looking good on the short term and intermediate term time frames. We have strength in both. The only thing that we haven't done is take off and make a new all-time high. So it's trying, but we'll see how far it can go. This was quite the amazing rally from November 15th last year up to January 26th. So we'll see if this market's got enough juice to get up there. But right now, everything is looking very good for the Dow Jones Industrial Average. Here's the S&P 500 stock index chart, and you can see that it has been in quite the uptrend since about April 2nd, and it took off and broke its prior high of January 26th and did that last week on August 24th, August 24th. We broke to a new high and as well made a new high on August 27th, which is Monday of this week. So the S&P 500 is extremely bullish right now at record highs, and if I turn on the short-term indicators, the 5-day moving average and the 20, you can see that the 5-day moving average in red is above the 20, which is obvious because this beautiful rally indicating a lot of short-term strength. And if I go ahead and turn on the intermediate term indicators, the 20-day moving average in blue is above the 50-day moving average in purple, and did so on May 17th, indicating intermediate term strength has been confirmed way back in May, and this thing just continues to go and go and go. So right now there's a lot of strength for the S&P 500. There is nothing bearish on this chart at all. So we'll just see where we go and take it one day at a time. Here's a chart of the Nasdaq 100 stock index, and it too has been in a nice bullish uptrend since April 2nd. Lots of volatility along the way, but it is in a nice uptrend at record highs as of August 27th. Of course, if I turn on the short-term indicators, the 5-day moving average in red is above the blue 20-day moving average, indicating short-term strength is in fact confirmed. And if I turn on the 50-day moving average in purple, you can see that the blue 20-day moving average is above the purple 50-day moving average, indicating intermediate term strength as well. So everything is very strong and bullish for the Nasdaq 100 as well. So right now, again, take it one day at a time and let's see how high this thing can go. Here is my favorite industry sector currently, and that is the S&P 500 Consumer Staples Stock Index. You can see the prior high was way back here on January 26th, followed by a 17.3% decline, ending the first week of May. Most of May we went sideways, and then we broke out to the upside in the first week of June. So that is represented by this yellow oval here. Ever since the first week of June, consumer staples has been in a very beautiful uptrend, moving back toward prior highs. Right now, there is nothing at all bearish about this particular sector. If I turn on the short and intermediate term indicators, you can see the 5-day moving average in red is above the 20-day moving average in blue, indicating short-term strength, and the blue 20-day moving average is above the purple 50-day moving average, indicating intermediate term strength as well. So things are looking very good for consumer staples, but I also have another industry sector that happens to make the cut for the favorite sector of the week, that is telecommunications. Here's the chart of the S&P 500 Telecommunications Stock Index, and you can see that from the high here on February 1st, it declined 17% down to May 9th, followed by a lot of volatile action until July 25th. On July 25th, we took off and began a nice rally that has taken us up to here. So right now, we had a similar situation to the consumer staples. We had a nice downtrend right here, which I will represent by this red line. And then we broke out, and then we took off. And if I put in those 5-day moving averages in 20 and 50, you can see the 5-day moving average in red is above the 20-day moving average in blue, indicating short-term strength, and the 20-day average is above the 50, indicating intermediate term strength as well. The other good thing is that the 20-day moving average is pulling up and away from the 50, but the 50-day moving average is also curving upward and bottomed out somewhere the second week of July. So telecommunications is recovering, and looking very good right now, along with consumer staples. Thanks again for watching this market update. Before you go, please do me a favor and click on the subscribe button on the YouTube channel, and then click the little bell next to it so you'll be notified whenever additional videos are posted. And in the top right-hand corner of christensenwealth.com and in the summary description of this video, you will find links to the Facebook, LinkedIn, and Twitter pages for Christensen Wealth Management. Please visit those pages when you have time and like or follow those pages while you are there. That way, throughout the week, I can communicate with you on social media as well as through these videos. Well, have a great day and a great week, and I look forward to seeing you again in about another 7 days. Bye-bye.